Hi, and thanks for joining us for another great video here at Street Smart Options. Today we're talking about option trading spreads. And folks, if you're not a member of our community over on Facebook, all you need to do is just type in the letters SSO and you'll find our free Facebook group where we post lots of good information as well as videos like this. If you're watching us on YouTube, feel free to hit that like button and go ahead and think about subscribing if you haven't already done so. So with that being said, now we're going to talk about option trading spreads. Go ahead, Jonathan.
Thanks, Jim. Yeah, so today we're talking about options trading spreads, and the stock we're going to look at for for the options trading spreads is Etsy, and I'm going to talk about trading deep in the money call options, vertical spread. So with the reason I picked Etsy is because I'd like to focus on a stock that doesn't have a whole lot of volatility in terms of the stock trends. So like I'm looking at Etsy right now, and you can see that it kind of hugs its 50-day moving average here. And it doesn't have a whole lot of volatility, crazy volatility, like some other stocks out there, maybe in the industrials space or maybe in like the biotech space or something like that. And it's a predictable kind of business, and because of that, investors don't jiggle the stock too much. There's a lot of long-term holders in this kind of stock. The business has a big subscriber base, and it's not subject to quarterly earnings surprises too much. So so this is the kind of stock that is good to focus on for these deep in the money vertical call spreads, an uptrending stock without a whole lot of volatility in it. And the other thing I wanted to mention is that today we're in a bull market with regards to the overall market, right? So if we were to go to, we'll go to our stock charts here, and we're going to type in here the S&P 500, and you can see that recently that the market has had a little bit of jiggleness to it, right? And 2018 is kind of a flat year overall. It was actually, I guess it was, actually down for the year, right? So we had a little correction in 2018. The market recovered. The market then recently sold off and is now in a renewed uptrend. I don't know how far this uptrend is going to take us, but we're in a renewed uptrend. So I like to focus on, at a time in the market when the wind is at your back, and so the wind's at your back right now. And we're looking at Etsy. And the other thing to keep in mind is we don't really want to hold these kind of positions through earnings, right? Let's take a look at when this stock has earnings. So we're going to go to finance.yahoo.com. And we're going to type in Etsy to see when earnings are on this stock. And we can just take a look at the summary page here. And on the summary page, it has an earnings date of August 15th, August 9th, around that area. So we don't want to we don't want to be in a vertical call spread through an earnings event, even though we don't expect a big surprise through earnings. Even so, just to limit our risk, control our risk, we don't want to be doing that. So we know what our time frame is. It's going to be at least before the beginning of August there. So going back to Etsy here, now we're going to say, okay, so we're going to do a vertical call spread. What we're going to try to do is, we're going to do a deep in the money one. And the reason we're going to do a deep in the money one is because we can make money even if the stock goes up, sideways, or down somewhat, right? So so the stock right now is trading at last trade 67.43. We could either do a 55-65 vertical call spread or a 50-60 vertical call spread. Now, the closer we are to where the stock is trading now on the higher priced option, which would be the 55-65, the more potential money we can make on the spread. And the lower down we go, if we do the 50-60, the less potential money, but the lower risk we have, right? Because then because the stock is trading at 67, we can actually make money even if the stock goes down to 60. We'll still be making money on the stock, right? So this is lower risk. So I'm gonna go with the 50-60 in this vertical call trade example. And so let's take a look at, and I'm going to go to Interactive Brokers and look at this chart. So we're going to go with the 50, 60, and we're going to try to do maybe a month out, 6 weeks out, something like that. So let's look at the options chain on Etsy. And I have pulled up already the July 19 options chain. And this is 28 days out till expiration. And what we're going to do is we're going to take a look at the 50-60. So we'd be buying the 50, and we'd hit the midpoint on this, but we're going to do the strategy builder on Interactive Brokers here. So we're going to buy the 50, and we're going to be selling the 60. And then what we can do with the strategy builder is we can actually hit the midpoint on this. So we can just pull this down here, and we hit the midpoint. And now, mind you, we might not actually, get lucky enough to hit the midpoint, right? So if our first time we don't succeed with this midpoint, so we wait like 15 minutes or so and we don't hit the midpoint, we can go in here and we can increase the amount we're willing to pay by a few cents until we get executed, or before. We definitely want to be making money on this trade, so we don't want to go too high on our what we're willing to pay. But let's start with 9.35. Now let's see if 9.35 makes sense from a from a profit standpoint, right? Are we going to be making money on this trade? How much are we going to make? So let's take a look at we're going to go to this calculator that we have on our website on Street Smart Options, which calculates for us the potential loss of a trade, and it also gives us the annualized gain. So I've already put in here that we have a portfolio of $100,000, and we're willing to risk on this trade just 2% of this portfolio. So that would mean that if we put just those two things in, and the amount and how much we're going to be out of pocket, we can do 2 contracts on this thing. And so with a 2% position size, and today's date, by the way, is June 21st, 2019, and we're doing 28 days out. The high strike is 60, low strike is 50, and the price of the high strike option, the midpoint is 8.25, and the price of the low strike option, the midpoint, 17.7. So given those parameters, given that data, we can see that we are going to be, our out of pocket on this initial outlay is going to be $1,890. And our max profit is $110 within 28 days, which gives us on an annualized basis 75.9% return annualized, which isn't bad. I prefer to shoot for 100% annualized on here. So if we were to go closer with the 55-65 spread, we might get closer to this 100% annualized gain if we're willing to tolerate the increased risk of, if the stock goes down, it's trading around 67 right now. If the stock goes under 65, we could be losing money on this. And so this is a safer trade. But so now the max profit, what's the math behind some of these numbers here? Well, the max profit's calculated as the distance between the call strikes, which is 60 minus 50, which is 10, and how much we're out of pocket. And how much we're out of pocket, it's going to cost us, this is $9.45 difference between the prices of the options. And so $10 minus $9.45 gives us 55 cents. So that's going to be the max profit. And then you multiply that by the 200, right? Because each contract controls 100 shares. And that's how we get the max gain, which is $110, right? So what we want to do here then is we want to take a look at the Interactive Brokers, and we want to make our trade, right? So we have our midpoint, and we can go ahead and we can submit our order, and Interactive Brokers is going to put a limit on here for us, and we're just going to transmit. And so, if we're lucky, we'll get that spread, and we'll get the midpoint. And if we don't, then we'll have to cancel the trade, and we'll resubmit the trade. So that's pretty much the lowdown on how I trade long call spreads, the vertical call spread. All right, Jim, back to you.
Okay, folks. So again, if you haven't actually joined us on our YouTube channel, feel free to take a look at that now. Also, if you could hit that like button, and we always would appreciate comments on our YouTube channel, because it really helps Jonathan and I know what exactly you're looking for and what information you're looking for. If you're looking for more information about how to actually trade like this and how to actually make money instead of losing money in the stock market, we'd be happy to help you out with that as well. You can go to our website at streetsmartoptions.com. Thanks, and have a great day.